We can finance cost or points into the loan and exceed our product CLTV without affecting the rate.
Let's say the LTV went from 65 to 67. You can use those finance points and boom, you saved the loan.
Let's finance some of these closing costs, and now you have the money for those repairs.
Hi folks, and welcome to AD Mortgage Insights, where our goal is to assist our partners in identifying tools and resources to help them win more deals. I'm Jerry Byers, Senior Content Manager for AD Mortgage, and always on the lookout for strategies, tools, and resources that can help our brokers and MLOs close more deals. Recently, I came across an excellent way to utilize the flexibility that AD Mortgage provides to all of its partners. I reached out to two of our veteran account executives. They have over 55 years of combined experience. They explain how this strategy works and how our partners can utilize it themselves. Mark Buratt and Rene Sanchez join us today to share the details. Get ready to take some notes on how to close more deals and build your business. Let's get started.
All right, guys, really nice to meet you. I'm super excited. Been trying to set this up for a while, and I'm finally, it's finally happening, and super psyched about it. So we're going to talk a little bit about a unique strategy that you guys shared with me that just really gives people an opportunity to make a deal happen. And I'm pretty excited to hear how it works. So we have, starting with Mark Buratt and Rene Sanchez, and they are two of our AEs out on the West Coast. Mark, you want to start? Just kind of tell us a little bit about yourself.
Yeah, sure. So again, my name's Mark Buratt, and I've been in the mortgage business for, let's say, close to 30 years, of which 29 has been in wholesale. And I've worked for companies such as IndyMac, Countrywide Specialty Lending, then Countrywide A Paper. And I've spent the next 16 years at Flagstar Bank.
And how about you, Rene?
Well, let's see. I've been in the business at least 25 years plus. Wholesale, 100% of the time. Worked for Flagstar as well for 9 years, and before that, I was a regional over at IndyMac Bank, and learned a lot throughout this process, throughout my career, and just helping people get to the end of the finish line is what I specialize in, and helping them sharpen that skill with every loan.
Fantastic. And as I understand, both of you guys are in Southern California. Mark, you're based out of the Irvine area, Orange County, and Rene, you're in Riverside County, Inland Empire.
Yeah, Upland.
Upland. Okay, Upland. So both of you guys in Southern California, pricey region. So, there's certainly quite a bit of opportunity as far as home lending goes, and some challenges, without a doubt, because of prices. I'll explain a little bit how we got connected. So it's really kind of odd. Mark was asking one of our marketing folks if we could put together a flyer to describe how we could finance points into a loan. And I read through it so that I could explain it to her a little bit better. And I said, wow, this is really a cool idea. And so I reached out to Mark and then to Rene subsequently and said, hey, could we do a video where you guys explain this to me? And it took a little bit of time to get it all organized, but here we are. And if you can, how does financing points work, and what's it all about? If you can give us kind of like a summary answer of how that works, then we'll get into some details.
So it's a great selling tool to get people to look at me as well as AD Mortgage for our unique offerings. I always start with a question. I ask them how they normally handle a situation when a borrower is short to close. And the most common answer I get is they'll get a gift letter, a gift from a relative or something like that, which involves a little extra documentation from underwriting, a couple more hoops you have to jump through. So I'll begin telling them with that we have another options that most non-QM lenders don't offer. We can finance cost or points into the loan and exceed our product CLTV. We do this without affecting the rate because the additional 2%, which is our maximum, you can add up to 2% of the loan amount, is not considered in the total LTV. So people get excited. They're not really familiar and they haven't heard about it, so they're interested in learning about it. So I give them some examples of situations where you can use it. On an owner-occupied or a second home, you can use it up to 75% LTV. You can go over that, so you'll be at 77, right? On an investment property, you can go to 70, which becomes 72. And on a DSCR, that's 70% will end up 72 as well. And foreign nationals, which we specialize in, is at a minimum of 65, but you can still add the 2% onto that.
Got it. Okay. So, exactly how can our partners utilize this specifically to, like you said, get us across the finish line? What kind of situations will we be in, and how would we go ahead and get this kind of started? How do you approach it?
Yeah, sure. So financing points is not just used when you're short to close. Let's say the borrower wants to buy down the rate. So you can finance the discount points into the loan amount. Again, doesn't affect the rate. Or let's try another example. I'm sure everybody out here has experienced an appraisal coming in low. So which means the LTV has increased and therefore the rates increased. Well, let's say the LTV went from 65 to 67. You can use those finance points for the closing costs, bring the LTV back down to 65, and boom, you saved the loan. Or at least you saved having an awful conversation with your borrowers. So, that's another point. The thing is, and this is what's so unique and I love about AD Mortgage. We service our own loans. These are our own guidelines. Most non-QM lenders do not offer financing points. So, with us, we say it's, the power of yes. And this is one of the ways that we can take a borrower whose loan might be in trouble and get to say yes. Very easily, all you do is write an email to our lock desk and say, hey, add on 2 points, financing points, and they'll take care of it.
All right,
It's
fantastic.
simple and easy.
You guys are dealing with your partners, and they, of course, have a borrower. And so you've got a file. And at what point does this come up in the conversation? Do you start with this, or is this something that you bring up when the loan's struggling a little bit and you're worried about getting the file, like I said, across the finish line? At what point, what stage do we get into this?
Well, there's no problem until there's a problem.
Okay.
And it's our job to come up with a solution.
Okay.
And so when I review my pipeline, I look to, I check the value of appraisals. If they've come in low, I look to see if financing points might help. And if I could do the financing points, it's certainly easier than going out and trying to appeal the value of an appraisal.
Gotcha.
Things like that. And of course, the other situations, as Rene discussed, the shortage of the shortage of funds, because that's a killer.
Right. So, Rene, were you going to add something to that?
Yeah, so also if I see a maybe appraisal coming in short and brings the loan from 70% to 71% LTV and it's a condo, I can go back and talk to the loan officer and say, hey, we can restructure this. We can finance the points, get your LTV back down to 70 and keep you at a limited review, which is great. So you don't have to go through the hassle of a full condo review. There's also the option when a loan officer is saying, hey, I need a little bit better rate on this particular deal. Say, well, why don't you go borrower paid? We can then finance the points. You can stay at a better LTV, and you're giving your borrower the better rate. The small increase in the loan amount is much more beneficial than the rate given to the customer because you're giving them a better rate overall.
Gotcha. So, I don't know. I guess I looked at this kind of like a mulligan in golf, and it's like, do I use my mulligan on the second or third hole, or am I saving it until I get to the back nine, so to speak? And so what Mark, it seems like you're saying is that, hey, I save it, use it when we need it. And Rene, what you're saying is you're looking at it very early on and looking at how can we get this loan priced the way that we need it as early in the process as possible. So it seems like it has flexibility. It doesn't really matter when. It's just when would it not be a good plan or a good idea to do this? What are the drawbacks?
One of the drawbacks is that it can affect the debt ratio. So if the debt ratio was tight to begin with, let's say you're at 49% and the programs allows 50, once they run the AUS and you're above 50, then we're going to have to rethink this because
Gotcha.
it could end up with a loan going into suspense.
Okay. And in your experience, guys, how often does this happen where, where, you know, DTI becomes an issue in trying to work this in as a solution?
Um, it hasn't really happened yet. There's one thing that we need to emphasize is that this applies only to non-QM. You cannot do this for conventional or for govies. Fannie and Freddie wouldn't allow it. Too bad.
Mhm.
Also, there's one caveat. If you have a non-QM loan and you have an exception on that loan because AD underwrites, we use all our own guidelines, so we make a lot of exceptions. But once we made an exception, this product is no longer available.
Gotcha. Okay. Um, so can you give me an example, like a real world style example of how uh, this might be applied to some kind of scenario? Um,
Um, so again, it's not a problem till it's a problem.
yeah, that's great.
But if if shortage of funds happens to come up when we're discussing scenarios or LTV becomes an issue, that's when I might suggest this on our non-QM loans. Um, it's not something I use too often because it's rare that people really have such a shortage of funds. But when they do, we're here to help. It's a win-win situation.
Gotcha.
So once in a while, you'll have a purchase transaction where when you get to the closing towards the end of the file, maybe there's minor repairs that need to be done to the home. Maybe it's 2 grand or something like that. And the buyer starts getting a little not that confident, right? They're saying, well, hey, I'm using all my funds right now and to close this transaction. I don't have the money to make these repairs. That would be a good opportunity to come in and say, let's finance some of these closing costs. So you have to come in with less down, and now you have the money for those repairs.
No, that's a great example. And I can tell you this is exactly what happened to me. Of course, I didn't finance points and I wasn't doing non-QM. But years ago, I bought a house and they're like, yeah, hey, everything's good to go, but the furnace, it's shot. It's going to need to be replaced. And it was taking me everything to get in there. And I ended up having to borrow money from my dad to replace the furnace a few months after close. But yeah, this kind of deal would have saved me. Absolutely. So, what resources would you say to help prepare LOs for situations like this? You know, what can we do to educate them, to let them know what tools, what resources, um, so that maybe they're prepared like you guys are going into a deal of what essentially what they have in their tool bag to get this going, so that they're not relying 100% on you. Maybe they know that this is something they could do. Is there a checklist? Do we have some resources that we can share from with them?
Yeah, sure. So first, people should know that we have two websites. One is admortgage.com. You do not need any website credentials to log on. It's open to everybody. It's good for pricing loans. It's really great for looking at the guidelines, whether it's non-QM, whether it's conventional. So if you're going to do non-QM and you're going to do mortgages, I recommend you start learning your guidelines, and we make it available.
Mhm.
Um, Everything's easy to find, and if you can't find it, of course, you just call me or you call Rene. And then there's the AIM website, aim.admortgage.com, and that's where all the real work gets done, registering the loans, etc., etc. So those are our big resources. If on the AIM website, we also have what's called our Learning Center. I mean, it's really great. It takes you through all of our processes, step by step, easily read, easily understood, and they've even drawn pretty pictures. So difficult, to make a mistake.
Gotcha. Anything to add to that, Renee?
I mean, also, we don't mind as AEs that you communicate with us the challenges that you have on your file. And then that's why you have such experienced AEs like Mark and myself who've been around for 25 years. When you do have an obstacle, you can run it past us. We talk it over and come up with solutions. I mean, that's why you're coming to an experienced account executive.
No, and I think both of these are great points because for me, I'm not a loan originator. I'm not a typical mortgage professional. The AIM portal I find invaluable. That and the Learning Center, just learning about our products and how they work. I think it's great. But like Renee said, I have been so impressed in my time with the company at how knowledgeable and professional our people are from front to back end. Whether it's our underwriting staff, our quality control people, and certainly our AEs and the people who are out there doing events and talking about our programs. You guys just knock my socks off with the amount of knowledge that you have. Sometimes I feel like I need to walk around with a glossary so I can look up certain terms because you guys rattle them off so well. But it is very impressive. Not sure if every company can boast of such great people, but my experience, we really are surrounded with some quality individuals who really know their stuff. So that's good. Um, in addition to that, any other final thoughts you can suggest for LOs or AEs regarding this point system or anything else?
Well, first, people should remember that we're a one-stop shop. Service is really incredibly important to all of us. I mean, let's talk about underwriting. You mentioned, the underwriters. One of the really great things is that we encourage you, unlike other lenders, to speak with your underwriter. Oh my God, what a concept.
Yeah.
So whether you call them, whether you email them, they will answer. When you get your initial loan decision, they're going to call you. How many companies does that actually happen with? So we're here to help you close loans.
No, well said. Fantastic. I couldn't have scripted that better for you, Mark. That's fantastic. That's exactly what we like to hear. So, like I said, the goal with us is always to find ways to share with our partners to help them close deals and to find solutions. That's the whole point of the insights discussion that I do, is just find those tips and tricks, those I hate to call them hacks because they're not really hacks. They're things that people gain from experience and knowing the products and the programs and knowing how the rules of the game. And so, that's the whole goal here. That's why I'm so excited that I got to talk to you. Because, you guys know your stuff much better than I do. And you're doing something that's helping people close loans. And this helps everybody. I mean, the borrower, they get a house. The LO, they get to close the deal. And then this is their income. And for you guys, of course, this, affects your income as well. So, it's a real big win for everybody. So I do appreciate you guys taking the time. I know it can be a little awkward sitting in front of a camera talking about these kinds of things, but I really do appreciate it. I hope our viewers appreciate it and will reach out to you. Speaking of that, how do we get in touch with you? If I'm an LO and I'm like, hey, I want to do some business with AD, how do I find you guys? Should I just look you up? Do you have Instagrams, LinkedIn accounts? What's the best way?
You can find me on LinkedIn under Rene Sanchez. That would pop up with AD Mortgage, or they can always email me at rene.sanchez@admortgage.com. And I guarantee responses within 30 minutes.
Oh, wow. That's fantastic. Is it?
Yeah, I too am on LinkedIn, and my email address is mark with a K .buratt@admortgage.com.
Awesome. Hey guys, again, thanks a bunch. Really appreciate it. And I hope that we'll be able to get together again sometime in the near future and talk about some other projects that we have going on. But thanks for coming on the show, and keep in touch.
Sure
Thanks
thing.
for having us. Thanks everyone for listening.
Thanks for watching. Let's hope you can utilize this points financing strategy to help your borrowers get their piece of the American dream, while building your income and business in the process. I really appreciate Mark and Rene for sharing their expertise today. They're really patient guys to take the time to explain things to me in layman's terms. If you need or want a refresher on how to put this method into action, reach out to Mark and Rene. Their contact info is in the description. Or touch base with your AE at AD Mortgage. Please be sure to like and subscribe to the channel and share this with your friends. We'll see you again soon.